Well, good afternoon, everyone, and thank you for joining the 12th edition of the Kansas City Commercial Real Estate Market Pulse. And I'm really excited today because if you guys are live seeing this, and streaming either on YouTube or on LinkedIn, thank you for both platforms for being there with us. You can see that we've got the great Bob Knakal with us here today. So, Bob, thanks for being here with us. We'll get to you in just 1 second. I just want to tell people that this is so important to me and to the industry, is to be able to share premier market intelligence and about your market. And so what we're trying to do here is, and we're committed to delivering timely, valuable insights that help our clients make informed decisions. And as I was researching Bob's storied career today, and I've got some slides to show this, Bob, you have been delivering market intel and information for over I think 40 years now in New York City. And that is incredible. Not only the way that you were doing it physically, still doing it physically, but in the amount of time, the amount of knowledge that you've gained in 40 years. I just want to tell you, that is such an inspiration for me, which, being a commercial real estate broker for the last 7 or 8 years, it's a lot easier to get the information and to aggregate that information and to disseminate that and get it out to the masses. And you've been doing it for 40 years. So kudos to you, my friend. You are a big inspiration for this market pulse here. I just want you to know that. And I've never told you that before.
Well, Logan, I appreciate that. And hello to everybody out there. Great to be with you. I always love talking about real estate, and thank you very much for those kind words, Logan. I'm very, very happy to be with you and to all the listeners and watchers today.
Absolutely. Well, I know there's a lot of excitement around that. Together our team is dedicated to delivering top-notch service and results, bringing you market intelligence and a collaborative approach to every client we serve here in the Kansas City market and the surrounding areas. Here's a look at our fantastic team many times. And I just got a text message, Bob, from Katie, who your team has been interacting with. And she just mentioned to me, man, Bob's staff is just really awesome and they're great to work with. So that is phenomenal and a testament to what you have been building over at BKREA and in just your experience in general. But here's our team: Katie, Micah, Max, Nathan, Chad, and Nick, spanning multifamily, industrial, retail, and land here in Kansas City. So if you have any needs in regards to identifying a replacement property for your 1031 exchange, or if you are looking for a broker opinion of value of what we like to call, Bob, property performance audits, trying to do something a little bit different, right? Then just reach out to us. We'd love to speak with you. My phone is ringing off the hooks. I was talking to Micah earlier, right before this call, 15 plus text messages unread and over 7 voicemails just from today. So that is very exciting. It's very stressful because I'm not able to answer and do the things that I want to do, right? But that's kind of one of the things I want to talk to you about today, Bob, is prioritization. But that to me is a really good marker of, and it's kind of a leading indicator of, if my phone starts ringing, one, maybe I've done a good job with the market pulse and other inbound, right? But likely it's because people are ready to transact. And it's a mix of, the last 2 weeks, 3 or 4 1031 exchanges. Sellers are starting to really be interested in looking at 2025 goals. And so if you are interested in speaking to our team, please do reach out. And today, I got to say, I've had a lot of guests on a lot of different shows over the last, because I have been doing podcasts for, or some sort of, interview style series for the last 5 to 6 years. But this is one that's got me pretty excited, and I'm honored and welcome. If you have to ask, and this, Bob, you might not know this, we asked ChatGPT who the most influential people in the commercial real estate world and sector is off of ChatGPT, and you were number one. So I'm going to say the most influential commercial real estate broker of all time right now. Here he is, the legend, Bob Knakal. I mean, Bob, we all know you've done, I think it is 2341, or is it more than that now?
It's 2342 now.
Hey, 2342, over $23 billion of real estate. And that is a phenomenal a phenomenal achievement. But what I love about listening, and I truly try to go listen to all of the episodes, or abundance of the episodes that people have been on. Obviously I can't listen to every single one of them, but the most recent episodes. And when you get asked about your legacy and your vision for the future, what I love is it's always people centered, and it's that servant leadership style which you have always embodied, it seems, from your career. And the number one thing that kind of stuck out to me was thinking about all of the people that were at Massey Knakal way back when, and how many different businesses that they either have started or are running in New York City. I think the running total was over 30 now. Is that still about the same amount?
Yep, I think it's still 30, and we're actually, there was a mortgage brokerage business that was just started by one of our guys, Morris Batesh, who's a great friend and a fantastic mortgage broker. Got his start at MK, and so that makes it 31 now. So, and I will say, thanks for mentioning that, Logan. It is the number one thing that I think, if people ask me about my legacy, it's not all the buildings sold. It's not the sale price of MK, which was great. It's not the fact that we sold more buildings than any other firm by 3x, including the big national and global firms, for 14 years in a row. But it really was the people that I've met along the way, and that's including the clients. And there's nothing more gratifying than hearing a client say, "Hey, Bob, you guys really did a great job for me. Thank you so much." For a lot of the folks we sell buildings for, their building is their number one asset, or one of their largest assets. So it really makes a very tangible difference in their lives what price we get for them. And so to have clients that are happy, that is unbelievably rewarding. And then, to see how the people that I've worked with have succeeded, and how they've had life-changing experiences. And if I played a small part in that, that feels great. And I'll tell you, to see, the New York City investment sales landscape and capital markets landscape here, and to think that there are now, 31 companies or divisions of companies that are either owned by or run by people that we taught the business to, that is the most rewarding and gratifying thing that could happen. And I think a lot of folks talk servant leadership, but a lot of it is just talking points. You gotta walk the walk if you're going to talk the talk. And one of the things I have to say, I think Paul and I walked the walk when it came to servant leadership, and just the proof is in the pudding. Look at the legacy. So it's just really, really great to see the success that these folks have had. And now I'm looking to create another new batch of young folks that are going to go out and do great things in their lives. And we're off to a flying start at BKREA, 8 months in, a couple of closings, a couple of contracts signed. We have 29 exclusives now, over $2 billion of listings. And, I'm starting to see our young folks really flourish, and so excited about what the future holds.
Yes. Well, you should be. And it speaks volumes. I mean, we have had the pleasure of interacting with multiple people in your company already. I actually know a few of the folks that are in your firm through LinkedIn and have been following their transitions as well. And I think they are very excited. And like you mentioned, the proof is in the pudding. Now, Bob, there is one, and sorry, there's people here from Fort Wayne, Indiana. We got some folks here from Orlando, Florida, Columbia, Des Moines, Iowa. There's a lot of folks dropping where they're at over here on LinkedIn and on YouTube. So thank you for being here live. We very much appreciate that. Bob, one question that I selfishly have is, when you started at Coldwell Banker, we'll get to that point here in a second, but you kind of, obviously you thought it was a bank, which I thought was really interesting. Yeah. So we'll get to that point. But when you started Massey Knakal, you revolutionized the brokerage model with your innovative territory-based approach, which became a hallmark of your firm's success before your acquisition by Cushman and Wakefield. And can you just tell us a little bit about why you took that type of approach? Was it a need in the marketplace? I selfishly have not heard that question really asked, and I'm just really curious on, maybe it was the market, maybe it's New York City. It's very different than here in Kansas City, obviously. But tell us a little bit about that territory-based approach, because I find it fascinating.
Sure. Well, Logan, I will tell you, thank you for that. But we didn't invent the system. The system that we implemented was really a residential brokerage system. That residential brokers use a farming system, they call it, where they'll pick a neighborhood and go around and knock on every door in the neighborhood.
Yep.
And what we did that was different is we applied that residential technique to commercial real estate. And what we did it for a couple of reasons. One, and most importantly, we wanted to be able to differentiate ourselves from everybody else. We were young kids right out of school, no track record at all. How are we going to convince people to hire us? Well, we said, let's know more about something than anybody else. What could we know more about? At that time, it wasn't a property type. So we said, let's get to know a neighborhood better than anybody else knows it. And publicly available information at that time was very, very sparse. The zoning in New York is such that on one block, you could have an office building, a hotel, an apartment building, a medical building, various types of properties. So we said, let's just take this small area. And when we started out, those areas, those territories, we called them, were very small. Paul Massey worked 55th Street to 63rd Street from 5th to Lexington. I worked 55th to 63rd, Lex to 1st. And we just made up a catalog of every owner of every building. And that was tough information to get back in those days.
Yep.
But we got that information together, got to know those blocks better than anybody. We're on those streets every single day walking around. And, that started to get traction. And then we grew the company like a jigsaw puzzle, and putting someone in a territory to the north, someone to the south, and then grew and eventually had somebody working in each of the territories in Manhattan, south of 96th Street. Then we went out to Queens, did the same thing, went to Brooklyn, did the same thing, went to the Bronx, went to Northern Manhattan. And then, we grew from just a little popcorn stand of Paul and I and an assistant to having 150 people, 250 people, 250 people in 3 offices, and had every square inch of the city covered. And, it was a very effective way to demonstrate expertise, to differentiate yourself. And that differentiation created a competitive advantage. And that's what we're all looking for in this business, is a way to have a competitive advantage.
Wow. Yeah. I'm sorry, guys. I'm over here with my notepad scratching down as fast as I possibly can here. Follow-up question to this. If you are in have you seen this be successful in other markets? Let's just take where I'm at, right? Kansas City, Missouri. Kansas City is a lot different than obviously New York City. It's a huge spread out, city. We got suburbs all over the place. And we have our urban core and we have our central business district, but most of the real estate that at least we transact is on somewhat of the suburbs. So how would you approach something like that in a maybe a more spread out market, Bob?
Yeah, well, I think the key fact to think about is we all want to be an expert at something. So the more narrowly you define what you do, the easier it is to become an expert. If I said to you, Logan, I want you to, know Main Street between 1st and 2nd Avenue, you could probably in a very short period of time get to know that. But unfortunately, you can't make a great living in something so small. So the key really is to narrowly define a market enough that you really can understand every aspect of it, every nuance, every detail, and be a true expert, but have that market be large enough that you can make a good living doing it. Clearly, this strategy is easier in larger, more dense markets. It's harder in smaller markets or tertiary markets where you may have to be a generalist just based on deal volume. But I think if you, I was actually talking to a broker in Kansas City not too long ago. He had about 3 years in. He was doing multifamily, And, I said, well, how many buildings are in your target market? He said, well, I don't know.
Mhm.
And I said, well, get your map of Kansas City and draw a line around the border that is either known to be the border of the city, or you make your own border, or you take half of the city or a quarter of the city, or whatever you want. But if you're doing multifamily, how many multifamily assets are there? Are you going to look at buildings that have 4 units?
Yep.
Are you only looking at over 10, over 50? You're only looking for garden apartments, and you're only looking for elevated properties. What are you looking for? Narrowly define your market and get to know it. How many buildings are in that market? And if you're doing the whole city, put the line around it, count the buildings. How many sales happened last year? How many sales happened the year before and the year before that? And what was the average price per foot? What was the average cap rate? You got to know this stuff. And I'm telling you, the overwhelming majority, probably more than 95% of brokers who are active, even if they have decades of experience, probably don't know those numbers. So if you want to differentiate yourself and compete effectively against the folks who you think, oh, how am I going to possibly compete with this person that's been around for so long? They've sold hundreds of buildings, and I'm just starting out. Well, you know what? You can differentiate yourself with that market knowledge. And so, I think if you approach it that way and just realize, I want to be the expert at a particular thing and become known as the go-to person for that particular type of transaction, you can do it, but you have to back up your knowledge with statistics.
Absolutely. Bob, that has been probably the most influential piece of advice that I have implemented this year. And my brokers, my team, know the 2 things that I always say is we have to know our market and we have to know our numbers. Know our market, know our numbers. Where do I get started? Do you know your market? Do you know your numbers? And what I loved about the know your numbers side, we're in the sales business, right? And actually, what business we're in from Bob Knakal, everyone, is we are in the information and the relationship business. And it happens to be that we sell real estate, right? But the biggest component for me about that was really dialing in and getting narrowly focused for each one of our brokers on our team to understand that last 24 months worth of sales volume, how many active brokers are in that space, what does the actual volume look like, and understanding what happened over the last 2 to 4 years in this market, right? And I've done just so much research because of listening to you speak and being inspired by the map room. We kind of fast forward a little bit to one of my slides here, and the question that many people wanted me to ask you, and I put a slide just for that because you already hit the nail on the head here, which is 99% of brokers answer that question: how is the market, with adjectives, not statistics. And you even go on many of your other episodes and shows talking about how a 5-year-old or a 7-year-old can answer the question, well, I feel like it's really starting to take a change because of this X, Y, and Z, right? Instead of answering the question.
Yeah, Logan, look, let me give you an example. I've never been to Boise, Idaho. I don't know anything about the Boise, Idaho market. Somebody asked me, hey, Bob, how's the Boise, Idaho investment sales market? Well, the market, we've seen a lot of change recently, and the market is, trying to find its footing. Interest rate policy has impacted the market. And, we're hoping interest rates come down a little bit. That should increase the volume of sales. But, we've seen some disruption in the market, and certain sectors are performing differently than others. And some investors are optimistic about what's happening. Others are a little bit pessimistic. And we're seeing some new buyers come in. I could talk for an hour about the Boise market, knowing nothing about it. It just shows that, adjectives are total BS.
Yeah.
It's like, what is really happening? If hey, if you can quote stats of what the volume of sales is doing, both from a number of properties sold and a dollar volume, and you look at how values are changing and what's happening in each individual sector, and what's happening with supply, what's happening with the construction pipeline in the sector. These are things that when you talk to, well, what do we want to do, right? We want to talk to an owner and get that owner to think, hey, whenever you want to sell your property or lease your property, you want them to call you. Why are they going to call you? If they think when they talk to you, they get something of value that's going to give them insight into a extraordinarily valuable asset that they have. So be valuable. How do you be valuable? Saying the market's hot or the market's tough doesn't help them. telling them that the volume of sales is up 62% so far this year, and next year it's likely to be up 125 to 130%, and values are on the rise. I had a client ask me the other day, said, Bob, excuse me, I'm talking to an equity partner of ours, and they wanted to know, what has happened in the land market in Manhattan between 1999 and 2024. How have the values changed? I said, well, with land values, we disaggregate into resi rental,
Mm-hmm.
condo, hotel, office, and then a miscellaneous bucket. He said, just lump everything together. I want to know generally, if you put everything together, what's the average? I say, well, in 2024 so far, the average has been $514 a buildable foot. And in 1999, it was $74 a buildable foot. I have the spreadsheets in front of me. Nobody else in the market can answer that. And so that is one of the largest developers in New York City called asking that question. But he called me because he knows I know.
That's exactly right. And that's the competitive advantage. And compounding on that, Bob, we have to spend some time discussing the origin of the map room and what you use it for, because here's a differentiating factor that I learned about you. You were almost contagious to technology, and maybe still are, right? But willing to adopt the methodology and figuring it out because of the way that it's transforming the industry, and with artificial intelligence, which we'll speak about very, very soon. But what I love to hear was, man, you were the last one in the office to have a computer. You still had a BlackBerry when people had iPhones. You had a flip phone for a very, very long time, right? All of these incredible things. And then you've
done your research, Logan.
I've done my research, my friend. And I am just waiting for your book to come out at some point so I can just digest everything 100 times over. So I hope that you are in the process at some point to writing this all down.
Yeah, you know what? The book will be out early next year. I'm working on it with my broker coach, Rod Santamassimo. It's been over a year in the works, so we expect to have it out sometime in the first half of 2025.
Oh, my goodness. Well, I don't know if you've heard it here first, but I sure did hear it here first. Two of my favorite people, Bob Knakal and Rod Santamassimo, in the commercial real estate industry, teaming up for a book. Brokers Who Dominate, Knowing Isn't Doing. All of those books are right here on my bookshelf. You can't see them, but I've read them many, many times. Okay, so taking that analog approach of and if you guys don't understand or know the story around why the map room got started, Bob, you could spend just a few minutes discussing that. But the point that I wanted to get through here was the fact that you were willing to go do the research, boots on the ground on all of the development sites, and then you put all of these maps together, and then you go and hire a chief technology officer or chief operating officer who has experience with self-driving cars, because I heard you say the other day, if he knows how to sell cars with artificial intelligence, I bet you he can sell buildings with artificial intelligence, right? So I want to know, how are you going to be combining this? But and because this is already a massive differentiator for you in your market. And I know that you are 21 for 21 on listing presentations in the map room, if not more now. And your historic average was about 26% when you weren't in the map room. And so tell us a little bit about the origin story of this thing and kind of what it has morphed into, which I think is, seeing people with their map rooms all over the country is a pretty cool methodology.
Yeah, well, absolutely. It's been probably the best marketing initiative I've undertaken in my entire career, was creating the Knakal Map Room. And now I'm 26 for 26 in the map room. We pitched number 27, which could be the first loss.
Okay.
Yet the owners are undecided. It's between us and one of the big global firms. And we'll see what happens. It could be the first loss. I know I'm not going to win every one, but certainly the percentages are in our favor. I do think that that in 2026 we will have at least a 75% market share in land sales in Manhattan, just based on the different things that we're implementing.
Wow.
And the success that we've had in that sector. But the genesis of the map room really came about out of frustration. I sell a lot of land in the city, and in order to and land in the city, you're probably thinking, hey, where's the land in New York? Well, you create land by knocking down old obsolete buildings to create land. But in order to value land properly, you need to know what the competitive landscape looks like, what is being built, what's going to compete with the new building. And remarkably, there's very, very little publicly available information on the pipeline. The most robust data set that exists is with condos. All the residential firms produce a condo pipeline, but Company A will say it's 9,000 units. Company B will say it's 6,000 units. How could they be so different? If I'm standing in front of a building and I see, cranes working and a building's being built, it's under construction. But I guess, when do you start counting it? When do you stop counting it? So for about 10 years, I wanted to go out and actually do a physical count of the buildings. The pandemic was the perfect opportunity to do it. The city was completely dead. There was no cars around moving. There were no people moving. There was nothing. All the stores were closed. And it just occurred to me, this is a perfect time to go do this. I went out into the field, cataloged every development site that was under construction, every site where the buildings had been demolished, every property that was obviously underbuilt per its current zoning. And in New York City, we're very lucky. We have an as of right zoning jurisdiction, so you don't have to go through any entitlement process. And then potential assemblage sites where you could put together a number of smaller buildings to make a site. And 220 hours were spent walking the streets, followed up by thousands of hours of research to understand every one of those sites. So we now have the development pipeline in Manhattan disaggregated into those 5 buckets I mentioned. We have every bucket down to the square inch. Within each of the buckets, there are 3 different subsectors, deals that are pending where a developer has bought the site, but construction hasn't started yet. As soon as they get a construction loan, it flips into the active bucket. And then there are different thresholds to take every active development into a completed bucket. So literally at any moment in time, we can tell you how many square feet of every type of building is being constructed, how many condos, how many rental apartments, how many hotel rooms, how many square feet of office space, how many square feet of schools or healthcare properties. And that has enabled us to more accurately value properties. And part of what we're doing now, we're also coming up with a land index that is an analysis of the 2,417 development site sales that have occurred in Manhattan south of 96th Street going back to 1984. It's a groundbreaking piece of research that we've done using the same methodology for all 40 years of that data set, applying AI models to it to see what metric or group of metrics foreshadow a change in the direction and the magnitude of change within that data set. So really, really cool, groundbreaking stuff. And again, I'm happy my cell phone goes on in the morning. But I hired my COO, Seth Samowitz. He did work in driverless cars for 6 years. He started AI companies. And I said, if this guy can make cars drive themselves, he can help me sell buildings. And it's really been mind-blowing to see the different things that we're using AI for and to create and to enhance the competitive advantage we have in the land space.
Within those 4 walls is everything you could possibly want to know about the development market in Manhattan. There is a reason why you are 26 for 26 on listing presentations in the map room. And there it is right there. So, wow, that is really interesting. I absolutely love the work that you have done and love the story about when you drove across the bridge because you were at the country house and you drive into the city and there's literally no one on the streets. And I'm sure you had never seen that before, right? Living there.
Like a science fiction movie, really.
Right.
Straight out of a science fiction movie.
Straight out of a science fiction movie, but what you saw was the opportunity that you have been trying to do for the last 10 years, which was to be able to navigate the streets in a way that would be a whole lot less combustion for you, or congestion for you, and to be able to get that work done. But it still took a lot of, how many hours did you say that you guys were on the ground?
220 hours in the field.
In the field. Okay, so 220 hours. Now, I was thinking about this the other day, because this is always changing, right? So what is your process for actually keeping this updated on a regular basis? Because I know that you said you have 3 different subsectors and different buckets, right? So I think I heard maybe that you are tracking either permits or starts or construction loans to be able to keep this updated. Is that correct?
Yeah, since we did the field work, we've been tracking meticulously on a weekly basis every demolition permit, every foundation permit, every building permit that the city has issued. We are checking the financing records to see when construction loans are obtained. It's a matter of just tracking the market very, very meticulously. Comparable sales in the development market are challenging to get straight information on. There's so many moving parts that do not have to be recorded with the city in terms of, the sale price is recorded, but were the bonus air rights part of the deal? Were there adjacent air rights from an adjacent property?
Right.
Did you have to buy tenants out? Did you have to pay for an easement? All of these things very profoundly impact what the real value of that site was. And as I always say, what really matters in development is what is your total price paid for the total buildable footage. What you pay for each individual piece of it doesn't really matter. And I use as an example, in fact, I use this, I was serving as an expert witness in court on development value. And the judge was having trouble grasping the concept of this blended value. And so I used for her an analogy. There used to be a restaurant on 50th Street between Madison and Park called Maloney and Porcelli. And on their menu, they had an entree that was French fries. The French fries were $50, but happened to come with a side order of filet mignon. So I said, whether you pay $49 for the fries and $1 for the steak, or $49 for the steak and $1 for the fries, doesn't really matter. You're getting your plate of food for $50. And in the same way, the developer only cares what they're paying in total for the total buildable rights. And what's paid for each component part really doesn't matter. So analyzing these development site sales and calling the buyer and the seller of every one of those sites to get the inside details really is a way to also differentiate yourself. And part of this whole thing, Logan, you think about it, why did I want to go out and spend 220 hours walking the streets? Well, number one, there wasn't a heck of a lot going on during the pandemic, so it was a good time to do it. But number two, you always want to have something nobody else has. Do something nobody else is willing to do. And that is what leads to a competitive advantage and will make market participants look at you a little differently. And we're all looking for an advantage. And the best way to get an advantage is to have or create something that no one else has.
Well, you have done just that with this map room, and with the way that you are approaching all of that data and applying your AI models to it. And look, I don't need you to give us all of the, secrets to the trade here, but there's kind of a couple different components of AI for me. There's the component of artificial intelligence that helps you become more effective and efficient, right? And that is what Naval Ravikant really talks about: leverage, using leverage to be able to do more in less time or in a better fashion, right? I think we all kind of understand at least that component with Chat GPT, with all of the different different large language models that are out there. What's interesting to me, and I don't think that frankly, I don't think that the market, the commercial real estate market, fundamentally from an information and relationship business, that's going to stay the same. how we aggregate information and the technology that we layer on top of that to help us make more informed decisions is, I feel like, where the big next opportunity is. Scan these 2,000 sites that I think you mentioned, either 2,400 sites or something like that. Scan these 2,000 sites, apply these 200 or 2,000 different AI models, and give me some inferences based off of that. That is very, very powerful, right? And so I'm just curious, in regards to exactly what you guys will be doing, or the benefit of artificial intelligence on top of that data, because you have the best data in New York City. And so being able to apply some technology, some computing on top of that is going to give you an output of what, Bob?
Well, you have the three main ways up on the screen of how we're using AI. And I'll say simply, number one and number two are funneling processes, whether it's prospecting or deal execution. You're starting with a massive, massive arena of potential prospects, and you're constantly funneling those that are interested, those that want to transact. You get hired to sell something. You have the field of potential buyers. You narrow that down to the people who are interested, want to see the OM, want to make a bid, the top bidders. It's a funneling process, and AI is really, really effective in making those processes more effective and efficient. Data interpretation, and your footnote is absolutely correct. It has the potential to be the most powerful because it's relatively easy to figure out where we've been. It's nearly impossible to figure out where we're going, and that's what everybody really wants to know. And AI has the ability to be predictive in that way. And I will tell you that the premise or the thesis behind which we're using AI for data interpretation revolves around the fact that the absolute numbers are not nearly as important as the relationship between numbers in a data set. So, for instance, if I tell you that in 2019 in Manhattan, the dollar volume of investment sales was $26.3 billion. You don't know what to think about that number. But if I tell you that at the peak of the market in 2015, it was 57.4 billion, and at the trough of the market in 2020, it was 11.1 billion, the 26.3 starts to have some feel to it. And in the same way, it is the relationship between the numbers in a data set that matter. One of the problems the real estate industry has is that most data sets are not very good. And even if you have a long-term data set, if the methodology for calculating the data is not identical each time, then it completely loses integrity in the relationship between the numbers in that data set. And what I mean by that, if I asked you I asked three people to calculate a cap rate on a deal. Are you using trailing 12? Are you using forward 12? What are you doing with vacancy? Are you making projections? If so, how are you making the projections? What's your stabilized vacancy factor? You look at all these things, and if you, for 3 years, were using trailing 12, and all of a sudden you went to forward 12, you're losing the integrity in that data set. I've not seen any company that has a list that says, hey, this is the methodology on which we are creating our data. And you have to have that. Fortunately, at MK, we had that. And I'm still using it. So for our land data and our multifamily data, we've had the same exact methodology used for 40 years. So we have data sets that have very high integrity. And what we're doing is, for our land index, for instance, we have each of those 5 buckets of different property types. We have the fluctuations in the land values on a price per square foot basis. And we're applying the AI models to figure out what potentially will cause this change in direction and magnitude of change. And if you look at what we're applying these fluctuations to, they're the things in each sector, things you would expect. Like in the rental land sector, where we're looking at where residential rents have gone. How have rents fluctuated? Rents for each different size and type of apartment, vacancy factors, et cetera, et cetera. But then we're also looking at a whole bunch of macroeconomic factors, interest rates, inflation, lending rates, price of gold, price of oil, S&P 500, Dow Jones Industrial Average, consumer sentiment, all these things. So that, and AI has the capability to do millions of calculations every second. So it may turn out that when interest rates drop 75 basis points and the price of eggs goes up 15%, the hotel land market will rally in 15 months. Who knows what it's going to come up with, but we're in the process of getting those data points back from the AI models now. And it's just really fascinating to see. So our land index is truly going to be a groundbreaking piece of research over 40 years that is going to come up with predictive information about how the land market operates in Manhattan.
Yeah. Okay. My head is going so many different places, and this interview needs to be 5 hours for me to get everything out. But it all came together for me there. You're building this in a way so that when that 57th group comes to the map room, you can now bring out or put it up on the screen somewhere and show them, let's do some predictive analysis. If you're going to go do an assemblage site and it takes you 12 months to knock it down and 24 months to get it built, here's the ability. Now we have the ability to maybe potentially forecast what your revenues could be, what your expenses could be based off of not only the market in Manhattan or just New York City, but also macroeconomic indicators. And that is,
yeah. And again, my business revolves around getting the highest possible prices for sellers.
right.
In all of my transactions, I've only exclusively represented the seller. I want to get the highest price possible. So when we're selling a development site that has the highest and best use as condo, most developers today say, well, I could sell condos I build there for $2,400 a square foot today. And I'm saying, well, you're buying the site today. You're going to be in planning for a year. It's going to take you 2 or 3 years to build a building. Why aren't you thinking about what you could sell the condos for 4 years from today?
Exactly.
And to have substantial data that will back up this information, that will back up this trended data, will lead to somebody agreeing with it and paying more for the property than they would otherwise. And everybody's not going to buy into that, but certain people will. And as long as there's one buyer out there that's going to pay a higher price for the property I'm selling, that satisfies my client and therefore satisfies me.
Beautiful, powerful. We're going to skip this slide. I do have one. This is a question, anyways, that came up. So I just made a slide on it. And Bob, I know that you have to get going at the top of the hour or a little bit before. So we will be very cognizant of that. I have heard you speak on and seen, I don't know if you know this, but your content then one episode goes out. And then now there's, all of these shorts that have Bob Knakal. If you search, I don't know if you've Google searched yourself, Bob, but if you do, there are hundreds of these shorts. And I just one time, during my workout, I just let my YouTube just go through every single short from Bob Knakal in preparation of this. It was pretty cool. But one thing that popped out to me was you were talking about 2025. And your prognostication of the stock in New York City and the trading and how it's probably in your eyes going to be at the highest level, I believe it was in New York City's history. So tell us a little bit about that. What are you seeing and why do you believe that?
Yeah, I think it's going to be absolutely a wild ride next year. And in fact, I was on CNBC with my buddy Brian Sullivan back in February. And I said to him, Brian, we're going to see the biggest sell-off in the history of New York City in 2025. And so many people called me, DM'd me, emailed me, said, Bob, what are you talking about? You're out of your mind. And at the time, if you looked at first quarter stats, sales volumes were completely flat compared to last year. But after the second quarter, they were up about 40%. After the third quarter, they were up about 60. I think we're going to end up 80 to 90%. And heading into next year, I think we will see the highest turnover ever, mainly because in the current market, we have different sectors of the market moving in different directions at the same time, which is very, very different from the past 4 major corrections, which were the S&L crisis in the early 90s, the recession in the early 2000s, GFC 08, 09, and then the Great Slog from end of 15 through beginning of 21. And in all of those corrections, every property sector was losing value, just to varying degrees. Today, we have sectors of the market that are actually doing well in New York City. The retail market, the industrial market, the hotel market, the land market are all on the upswing. The multifamily market and the B and C office market still have tremendous challenges to be faced. And because of that, we think that there is tremendous pent-up demand in the market to sell. We've had a situation where turnover has been below trend for 7 years in a row. That has never happened before. And of course, I'm talking in adjectives, so let me give you some numbers. Manhattan, south of 96th Street, the prime corridor of Manhattan, 27,649 buildings. The average turnover of that stock over 40 years has been 2.6%. And remarkably, it was 2.6% at the end of the 80s, the 90s, the noughts, and last decade. Very, very consistent. So it always reverts to that mean. And even during the S&L crisis in the early 90s, we were only below trend for 4 years in a row. We've been 7 years in a row below trend. That tells me that there is pent-up demand to sell. The lowest turnover we ever saw was 1.2% in 2009. The highest turnover we ever saw was 4.3% in 2012, as investors were rushing to beat the 3.8% capital gains tax increase that was embedded in the healthcare law that was going to kick in 2023. In 2013, I'm sorry. What we have now is a situation where the folks who have not sold, that wanted to sell for the past many years in those sectors that are doing well, are going to be discretionary sellers and decide, yeah, now I'm going to pull the trigger and sell. But there are people in those sectors that are facing challenges that are going to have no choice but to sell. And so we've never had a time where we've had both of those groups of investors being very, very robustly active at the same time. So because of that, I think the 4.3% turnover that we saw in 2012 will come in second after the 5 or 6% turnover we're going to have next year. I think it's going to be absolutely crazy. We see all the foundation of this being set today, and I have no doubt that that's going to happen. And it was clear as day. We saw it coming back at the beginning of the year. It was tough for people to understand it, but based on historical information, Mark Twain said, history doesn't repeat itself, but it often rhymes. I think this was clear as day. It was like Tiger Woods describing being on the tee on a par 5 and, seeing the trees down by the green moving in the wind, and there's no wind at the tee box. And he saw it coming, knew it was going to happen. And as the wind was coming up the fairway, the wind was clearly coming up the fairway. We saw it happening. And it's one of the reasons why I beefed up our head count at BKREA a little more quickly than I had anticipated. Again, don't want to get anywhere near the 250 people we had at BKREA back in the day. But, we're positioning ourselves to take advantage of what will absolutely be a wild, wild ride next year, and probably in 2026 as well.
Yeah, well, I appreciate that. And I wanted to ask you that question because hopefully that, seeing New York City and maybe other markets have that trend, it will come inland over here to the Midwest, the beautiful little Midwest here in Kansas City. So that's exciting stuff. And I do believe that 2025 is going to be a big year as well. Okay, Bob, here we go. Are you ready for a lightning round of some questions?
Let's do it. I'll give you quick pop answers.
Yep. Yeah. We're going to have to. I mean, I had so many questions around the hedgehog concept, the flywheel effect, so many different things. But I'm actually going to go to the listeners because they showed up today and they wanted to ask you some questions. And hopefully I'll be able to have you back on and I can selfishly ask you my questions. Okay. So this is from Ian Stroud out of Fort Wayne, Indiana. And I'm going to put this up because he is live here with us right now. And he is in the business for now about, I think, 7 months. Okay, Bob, he's in the multifamily and office space in Fort Wayne. I know Ian, he follows you very closely. And if you looked at his LinkedIn post, you would say, oh my gosh, that guy knows his numbers and he knows his market. But he asked this question: when calling a truly cold prospect that doesn't know you or your brand, how do you communicate your value?
You got to have something of value to offer them. Number one, explain who you are and what you do. And this is something my coach, Rod Santomassimo, reminds me of all the time. He says, Bob, don't ever assume that anybody knows who you are and what you do. So always tell them, hey, I'm Bob Knakal. I sell buildings in New York. But, clearly articulate what your value proposition is. And I'll say, I'll put in a plug for bobknakal.com. Go to bobknakal.com. Read my Knakal Nuggets. There's a lot of good stuff in there.
Great stuff
But
there.
one of them is, be able to articulate your value proposition in less than 10 seconds.
Mm-hmm.
Who are you? What do you do? Have it be very clear, nothing vague about it. So identify who you are, what you do, and then have something of value to offer. Have a statistic about the market, have a recent trend that's impacting their value. If they own property, they probably want to hear something that might impact whether the value of their property is going to go up or down. So have something of value to offer them and show them that you understand your market.
Beautiful. Beautiful. It's a great response. Robinson Mendez says, hey, Bob, what are some other things that we can do to get commercial real estate clients other than cold calling and networking?
Great question. Market presence is something that is really, really important. And, you've heard me say this and write it a million times. It's not who you know, it's who knows you. You have to become known in the marketplace. How do you become known? Through market presence initiatives. And yes, cold calling and networking are two of those, but there are several others. And the reason you want to do these market presence initiatives is because you want to be top of mind with people. As I said, in Manhattan, there's a 2.6% average turnover rate. What does that mean? That means when somebody buys a property in Manhattan, they're not going to sell it for an average of 40 years. So people are not always transacting. You have to be top of mind. So when that event happens that makes them want to sell or have to sell, death, divorce, taxes, partnership disputes, what have you, the next thing they think about after they get off the phone is say, oh, I got to call him or her and get this building sold. So I think the market presence initiatives that you want to do, in addition to calling and networking, you want to do email campaigns. You want to do texting campaigns. You want to do hard mail. Hard mail is so underrated. It's very, very sticky. Do create pieces of hard mail, send hard mail out. People's inboxes are flooded with emails, much less effective than they used to be. Send hard mail again. Create content. Write market reports, write articles, send that out. Be on social media, create content for social media. Be out there so that if people want to transact, they will think of you.
And I just pulled up a slide. We didn't get to it today, but here you go. Here's over 35 years of market presence, from print advertising to your baseball cards to the map room. I'm seeing themes over and over again. So great job there, Bob, explaining that. We got time for one last question, because I'm sure Bob is moving on to going to meet with a client or working on a listing presentation here. I know, and this was the coolest thing, and this is my last insert here, but when you got let go or they eliminated the position from JLL, whatever happened there, right?
I was fired. They had enough of me.
Yeah. So, but here's the cool thing. You said, then that same day, I went to the map room, I made my calls, and it wasn't the name on the front of the jersey that mattered, it's the name on the back of the jersey, and you just continued to do your work. I thought that was just so admirable, and that just made me light up. I'm sitting there in my workout room at my house just smiling, running on the treadmill, Bob. So that just really hit home for me.
No, true story. My meeting where I got fired was at 10 o'clock. That meeting was over by 10:05. At 10:15, I was in the Mac room making prospecting calls.
You heard it here, guys. You heard it here. That's incredible. All right. Last question is from Tyson Cobb. And Tyson asks, I'd love to hear Bob's thoughts on how brokers can leverage relationships to adapt to today's rapidly shifting market conditions.
Well, I think, Tyson, what you want to do is just realize every relationship is extraordinarily valuable. Try to create value. Try to stay on top of trends as they change. There's a lot of change going on in New York now with different policy. We just had a rezoning initiative called City of Yes pass. Most of the articles that you've read are super macro in terms of detail. Not a lot of granular detail in those. So we're doing an in-office seminar for our property owners, for clients that we have relationships with, to explain the granular details of City of Yes. There's a Midtown South rezoning initiative that's been proposed that is very likely to pass next year. We're way ahead of that, getting details on what that might look like and conveying that to property owners. Think about things that someone who owns a property would find valuable and try to create that information. If they own a strip center, and you are in the strip center business, and there were 3 leases signed down the block, convey that information to that owner. They would love to hear that. So just always think about being valuable. And at the end of the day, one of our responsibilities to our client base is to put them in a position to make the most informed decisions that they possibly can make. So the more intelligence that you give them, the more insight you can give them into the market, the more you can help them make more informed decisions, the more they're going to think of you as a valuable go-to resource.
Beautiful. Thank you so much, Bob. I'm going to have you back on just to get your insight on the entrepreneurial side of the business. I've got notes and questions around, like I said, the hedgehog concept, the stonecutter's creed, the flywheel effect, so many cool things that I love that you read still to this day a lot. But Bob, I know you got to go. Thank you so much for your time today. Thank you for your work that you've done in the commercial real estate brokerage. And here's the coolest thing. I believe, and this is my thought, but Bob Knakal is the Ray Dalio of the commercial real estate brokerage world. Here's the cool thing, Bob, and I'll tell you why I say that. Ray's to a point in his career now where he is able to package up his information and is giving it away in a free manner. And I've seen you do the exact same thing. You're giving away your secrets. If you would just go and do what I've done to prepare for this interview, I've been following you for a long time, sir, but did a lot more research just leading up to today. Bob's giving away a lot of great information, and it's all free. And I want to thank you for that. And I want to thank you for your time. So thanks, Bob.
Logan, thanks for having me on. And for those of you out there that didn't get to ask your question, feel free to email me, bk@bkrea.com. I'm happy to answer your questions and give you any feedback I can to help you. A lot of people helped me along the way. I'm extraordinarily grateful for their help. And to the extent I can help anybody out there, I'm happy to do it.
Amazing. Well, thank you all for tuning in to another episode and another edition of the Kansas City Commercial Real Estate Market Pulse. We'll be back in 2 weeks. Bob, good luck at your 1 o'clock meeting or 2 o'clock meeting for you. And we appreciate your time. Thank you all.